Well, good morning or good afternoon, wherever you are at. How is everybody doing? Let me know if you could. Looks like I'm coming through, but make sure. Get my ugly mug up there on the monitor, screen, whatever it is. Hello, Kevin. Welcome to Trading Coach's Playbook. We're going to try to have a little bit of fun today. Try. I think I always do. You may not, but I get to. Let's get right to it, I guess. Anybody liking the market today? Yeah, it is Friday. I know. Which is good about, right? If you're new to trading, you're probably like, oh, it's Friday. I can't trade over the weekend. You're freaking out. It's like, and then once you do it for 15, 20, 25 years, it's like, oh, good, the weekend's here. I can relax. I don't have to trade. I don't have to get up early in the morning. At least here, right? It's the market opens at 6:30 here, so I got to be up early. Of course, we're done at 1 o'clock. So the summertime when the weather's nice, if we want to go do something else, we got, still most of the day left over. So anyway, yeah, I'm not a registered broker-dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. So, um, yeah, apparently the market did not like the fact that uh, Trump put out a Truth Social this morning. At I think it was right about 4:45 or something like that. I was up and doing some Trade Watch Alerts research, and I saw the futures were down a bunch. And I went and pulled it up. And I looked and it had just started to sell off, and it was based on um, that True Social post that came out about the EU's not really negotiating in good faith. So they're slapping 50% tariffs on as of June 1st, unless they want to come to the table and play ball, it sounds like. So it's uh it's getting interesting, that's for sure. So it is not to get into the politics of things, but it does have an effect on the market. So the market was happy yesterday because the tax bill passed at least through the House. So uh, which is good. I mean, a tax cut is good. It puts more money in the private sector, and that's good for stocks and businesses. So, but let me get this thing turned off. Just realized I still have the volume on. Come on. But here's all the upcoming stuff we've got coming. Premium online workshops, mastermind group, 27th, Monster Market Movers, 28th, Trade U is 29th. I don't like to hear that, but it's all right. Inner Circle, June 2nd. Micro Day Trading Live, June 4th. And then Power Hour. Next will be on Tuesday because we got Memorial Day coming up this week. So we have a 3-day weekend, actually. So, and then Trading Coaches Playbook, which is every Friday. Power Option plays Monday and Thursday. Cover Call Explore with Trip on Thursday. And E-Money Think Tank with Brandon Monday, Wednesday, and Thursday. So, and then of course you can find us on all the social media platforms. I think I'm a little dehydrated. I had a little too much, well, not too much coffee this morning, but more coffee than water. So, but if we haven't met, most of your names look familiar, but those are the training tools I have created over the years. Patterns in Flash, which is all about patterns, of course, and how to recognize them, and it's all the baseline foundational charting information you need so that you can recognize the patterns. And you got 2 week trials on all these. So if you haven't had any of these experienced them, then go jump on the trial and grab it for 2 weeks and see if it's something that you may or may not need. So, and usually with the patterns of Flash, what I say, because there's quizzes in there, there's 4 different sections, right? There's basics of chart, basics of just foundational basics, foundations of candlesticks, and then foundation or patterns, different patterns, and then candlestick patterns. So those 4 sections in there, it's all pre-recorded video, audio, right? It's 6.5, 7 hours, something like that. But there's also quizzes in there that basically test your knowledge to see if you learned what you should have learned in the courses, right? So usually when I say if you're not sure where you're at with your technical analysis skill, go get the trial, go do the quizzes. If you ace them or get close to acing them, then maybe you don't need it. If you don't ace them, then it's probably a good idea to keep that subscription for at least a quarter. So, and then Weekly Whispers, that's the we started that, gosh, 2 years ago now. I do my research usually Thursday night, almost all the time. Do it Thursday after market closes, and I said, why not just record all my trading candidates, put them on video, and then people can access them. So if you want 20 or 30 candidates every week, that's what Weekly Whispers is. It's audio, usually about 45 minutes, give or take, depending on how many squirrels I find. Um, some of you know what I'm talking about. But I cover everything. I cover macro view, essentially what I'm thinking as far as here's what I'm looking at this coming week. Here's the candidates I have. Here's my macro view of the market. Here's the economic data that's coming up. Basically, anything and everything you need to make a decision with regard to trading. So, and it's me doing my own research and for my own trading. So, the small account big returns just it's a 2 hour pre-recorded class I did I don't know a couple years ago now. But if you start with a smaller amount, some of the different tweaks and things you can do to grow that hopefully quicker so that you can get to a not small account. Today is going to be excruciatingly simple. Usually it takes me a while to put these PowerPoints together, and I put this together. I'm sitting racking my brain like, what else do I need to add to this? And I really just kept saying nothing because this is really, when you really break trading down in its simplest form, this is, without getting into the weeds and down into the little minutia stuff, this is essentially what we're doing. The first question is, what is the trend? Right? Are we bullish? Are we bearish? What time frame are we looking at? Which plays into what time frame you're trading on. Right? Sometimes you can have three different trends in one chart. You can have the long-term trend being bullish, the intermediate term trend being bearish, and the short-term trend being bullish. So you can have a mix of it. So you've got to also factor in, and this is a little detail stuff that I don't want to go too deep into, but is what time frame are you trading on? That's an important component to figuring out what is a trend. If you're going to get into something same day, you might look at a 5 minute chart. If you're looking at a 3 month trade, you're probably going to want to look at the longer term and the intermediate term trend and determine what it is. If it's a short term swing trade, 1 to 5 days, you're going to look at intermediate and short term trend. The longer term trend's not as important. So you've got to look at the trend based on the context and what time frame you're looking at trading on. And that could vary depending on what you're doing. If you're doing spreads, if you do a lot of spread trading, which I don't, I've done a couple recently. One didn't work out. The other one isn't working out right now. I think it's going to in the end, but I've never been a huge spread trader. Uh, I'm a swing trader, directional trader, position trader, whatever you want to call it. But I'm trading, 1 to 5 days, and then I've got some positions that I put on for 3 to 6 months, 8 months maybe, depending on what it looks like. Uh, that's me. That's what works for me. And I kind of honed it down to here's what it works. This is my style. This is my, I don't know if temperament's the right word or not, but uh, and I've played with lots of different styles of trading. I've done this, I've done that, I've done it. Okay, this, yeah, I'm not cut out for that right there. The spread thing is like, yeah, I'm not patient enough for it. It's the main thing. Excuse me. So once you've determined the trend, the direction of the trend for your trading style, then the question is, what's the pattern? Is there a pattern? If there's not a pattern, that's probably not necessarily a good thing, right? And what I want to do is go through this quick, and then we'll look at stocks. So if you have certain stocks you want to take a peek at, we'll analyze the chart. I obviously can't tell you what to do with it, what to trade, but we can at least look at the chart together and I can analyze it. So start dropping symbols in if you want something specific. Um, but what's the pattern? There's got to be something that says here's the time to get in. Whether it's a candlestick pattern, a price pattern, whether it's a combination, whether it's something simple like a role reversal or a round number situation, because patterns show up everywhere. And if you're with Rob and you do a lot of fib stuff, that's all fibs are. It's a mathematical pattern that shows up in nature, and it shows up in human nature. It shows up in human psychology. It shows up everywhere because we are creatures of habit, and those patterns show up everywhere in our lives. If you don't believe me, just look at, when you put your shoes on in the morning, which one do you put on first? Your left or your right? Odds are you do the same one every single time, right? When you brush your teeth, where do you start? We get into these routines and habits, and every trader on the planet is the same as we are. We're all born with the same emotional baseline. We all have fear, right? There's the fear of falling, there's the fear of loss, there's all kinds of fears. And that's really what drives the market is fear. And those patterns show up in the market. That's why I fell in love with patterns. I've always had a kind of a passion for psychology and understanding the human brain and how messed up it is. it, it's really easy to tell you. I have to just watch TV for about 5 minutes. You watch the news for about 5 minutes. It's like, yeah, that's pretty jacked up right there. Like, how crazy is that person? Seems like people are getting crazier and crazier too. But the thing is, you can fit it into patterns. You can put politics, you can put religion, you can put anything into patterns, and there will be patterns that show up. How do you think they catch criminals? They look at patterns, right? You look at the psychological pattern of somebody, if there's a serial criminal somewhere, they're looking at all kinds of where's their demographics, and you can spot the patterns. That's how they catch a lot of criminals. And we do the exact same thing in trading, is we're looking for patterns. And the last one, the most important part, is what is the plan? Well, okay, it's not necessarily the most important part. It's an important part. The most important part is not only to have a plan, but the most important is to follow it, right? Because if you don't follow your plan, if you got a good plan in the long term, if the odds are on your side and your plan is solid, then over the long term, then everything should work out just fine. Where things go wrong is when you deviate from the plan. I mean, I remember back in 2000 when I first started, I started seeing all these black box systems, and computers were starting to get bigger and bigger and more powerful. And the trading arena has always been an area where people are high tech, right? I mean, there was high tech stuff going on back then because there's a lot of money involved, right? There's a lot of profit to be had if you can create a black box system that gives you a red light or green light, says get in here, get out there. When it goes green, you buy. When it goes red, you sell. Some of you may know what I'm talking about. I don't know how far back y'all go, but uh, I never had a whole lot of faith in those things because most of the time they were late to the party. And a lot of the reason for that is because they're just based on simple mathematics, simple data, which does work in the right periods. But then there are other periods where it doesn't work. Right now would be one of those periods. Most black box systems, I would say, are probably not working that well right now because of the volatility in the news and the speed with which it changes based on the news is so fast and so rapid that a data-driven system right now, considering the market is hyper emotional right now. Market's always driven by emotion, but there are periods like we're in right now where they are more emotional. It's really no different when you look at just life in general, right? We have physical cycles we go through that creates things. There's emotional cycles we go through with certain things, losing a loved one or, you know, family dynamic stuff that's going on in your life. And, it creates an emotional cycle and you might be in a down cycle for a period, going through different seasons. Um, why did that come up? I don't remember where I was going with that. I probably because I just had some. Oh, it was I don't remember. Anyway, I mean, I have my own emotional cycles going on over the last 2 or 3 years, and on a personal level, and it's draining, right? It's not fun. So, and, recently my dad had kidney cancer. He had surgery a couple weeks ago, and he's good. He's in good spirits. I talked to him the other day, and he's back to normal for the most part. He's still a little bit tired, he said, but uh, at this point, everything is looking good. So, um, but yeah, sticking to the plan is important. And accounting for your emotions as part of that plan is probably the most important part. And part of where this came from, thank you, Jennifer. Yeah, I think yeah, everything right now is good. So I haven't heard anything different. And it was really small. They just took the I don't know how I mentioned it the day or I think it was the week after he had the surgery, but it was just a small little piece they took off his kidney. So I don't know if he goes. I assume he goes back for testing again, probably fairly soon, but we'll see. Um, so yeah, hey, he's even. I mean, he's 82. He even said to my mom, it made my mom mad. He's like, "Yeah, I'm okay if I die." She's like, "Don't say that." She's all freaking out. She's like, why are you saying that?" So, which I mean, I can't imagine. I mean, they've been married for 50. What is it? What are we at? 25? Yeah, it'll be 56 this year in August. So, but um, yeah, absolutely. Yeah, life interrupts, and um, yeah, family's the only thing that matters in life, really. So, which I mean, the point. I mean, I imagine that's probably the core reason most of you were here. I mean, sure, we're talking about money, but the reason that you want to get to where you want to get to trading is probably so that you can spend more time and have more resources to do the time and the fun things with your family. I know that's, my driving motivation. And I don't care about the money. The money means nothing. It's just a tool. It's just an immaterial, objective tool to use to do what I want to do. So, but yeah. So that's all I have for the PowerPoint. It's literally the shortest PowerPoint I've ever put together. And what happened there? Dang it. That's all right. I gave back a little bit. I gave back a little bit of profit, but that's all right. If it breaks out, we'll hopefully get some. That's just gold. Where'd my charts go? There we go. Um, so the question is, do you all have some charts you want to look at? I'll start flipping through what I've got here. And what you'll see on here is, I mean, you'll see the trading plans. And this is, my trading is extraordinarily simple. I've literally had people say it can't be that easy. It's like, well, it's not easy, but it is definitely simple because it's really not. I mean, when I first started, I got so far off in the weeds, it's not even funny. I bought graph paper. I started plotting for like 4 or 5 days. I started plotting every day, the high, low. I started plotting the candlesticks, which from an exercise perspective was fun to learn and understand candlesticks a little bit better. But even though I had a good grasp on them at the time, but I was like, I'm going to do this. And I was going to create an indicator. I'm going to create the greatest indicator on the planet. Like, okay. I went so far for the weeds, and because my belief was that it was complicated and super hard. Because when you come in, it's like drinking from a fire hydrant, right? You got charts, you got options, you got this, you got that, buy low, sell high, and spreads, and you got all these different strategies, and there's so much information coming at you. It's overwhelming, and it seems super complicated. And then once you kind of weed through that and figure out what your style is, what works for you, what doesn't work for you, and you really distill it down to its simplest form, trading is really, really basic. And that's trend pattern plan. What is a trend? Long term, short term, intermediate, depending on your time frame. What pattern is there that says now's the time to enter the trade? Now's the time to get in, or here's the time to get in. And then what's your plan? And then from there, it's sticking to the plan and adjusting the plan as things play out, right? If you get stopped out, usually I get stopped out quick. 1 to 3 days, I'm getting stopped out if it doesn't work out, if it's not going in my direction. If it is going in my direction, I could be in it for 2 to 3 weeks, sometimes a month. And I will adjust it accordingly. I will scale out. If it's moving big, I'll take a piece of it out, maybe, depending on what it's doing. I might just be like, if it just goes sideways, you know what? My confidence is waning a little bit in this thing doing what I thought it was. So I might, cut it in half, maybe go from 10 contracts to five. And just say, you know what? I'm going to take a little loss. Maybe it's $50 or maybe I got a $50 profit or $50 loss or $500 loss or whatever the number is, right? It's like I'd rather just pare back my position and take my risk off the table because it's not doing what I thought it would do. So I'll cut my position in half. I just did that this morning on a day trade. This thing's not moving like I thought it would. I thought it would move quick. It's not. Let me cut the position in half, take half the risk off the table, and then if it moves against me, then I have half as much risk. I will take half the size of half the loss that I was expecting from out of the gates. That didn't come out right, but you know what I mean. Right? So it really comes down to it. I've mentioned this question many times. The question that should be constantly going through your head is, am I comfortable with the risk I have in this trade right now? Whether if you haven't pulled the trigger, like, I mean, here's Apple that's on the screen. That's not on there. We'll look at it. What's the trend? Well, whoops. I hate that. Hit the wrong key. So you can see there's long term on Apple, right? February of '07. I mean, let's look at semi long just. So you can see the trend, long term trend. I mean, this is what, 20 years or so, is clearly bullish. Intermediate term trend, if we go back a couple years, usually I'm looking at 1 to 2 years. Right? So it bottomed out here in 23. We've got higher lows. This low right here is still higher than this low. So on an intermediate term basis, well, we don't really have, yeah, I guess we do have higher highs and higher lows. We have higher lows is the main thing. So intermediate term, I'd say this is still in a bullish trend. But when you get into short term, which, 3 to 6 months, generally speaking, we've got lower highs and lower lows. So if we're looking at, 1 to 4 week trade on this, then the trend that we're going to focus on is the short term trend, which is a downtrend here. Lower highs, lower lows. Okay, there we've determined the trend. What's the pattern? If you don't see it, you definitely need patterns of flash because that one's super easy. I mean, it's not textbook perfect, but it's pretty darn close. Actually, it kind of is. Actually, it looks like a spider almost. It's a double top, right? I mean, it doesn't get any prettier than that. It is about as textbook as you can get. Two peaks that are almost exactly the same. You got a little trough here, right? This is the midpoint. If it breaks the midpoint, the odds are it's going to go lower. Question is how much lower. So we've got the trend figured out. We've got the pattern figured out. We're sitting right at the midpoint. Actually, it gapped a little bit below it. And of course, Apple's getting hit with that the news because they can't manufacture this in this country. It's too expensive. I mean, labor's too much. Unless they can find a whole bunch of people that'll work at for $5 a day. Not many people. Can't even find people that will work for $5 an hour. In fact, that's a quarter of the minimum wage here, which is insane, I think. But $20 an hour to flip burgers. I made 4 and a quarter to bust tires. Um, so yeah, so we got the trend, we got the pattern. The only question is the plan. And if you use the risk reward the way I do, I'm looking for a 3 to 1 risk reward ratio. So I want 3 times as much upside as I have risk, which actually I just noticed it. It works out beautifully. It's an exact round number, which doesn't happen often. But so the 3 to 1 target is right there, that green number. In fact, let me zoom that in so you can see it better, hopefully. I don't know how good you guys' screens are, how big they get, but so this is a 3 to 1 target. So if I get in at 192.39 entry, the stop's at 239. I put the 1 to 1 on here a while back because then it tells me I don't have to do math on this. I used to have to do the math on that. And I'm like, if I put a 1 to 1 line on there, it'll tell me exactly how much it is. So it's $8 of risk. And I've got $24 of upside. So actually, this is a perfect example for the risk reward because some people are like, I show the risk reward thing. I know most of you have seen it, but it's huge for me because it alleviates the emotional fear of what if I lose? Well, who cares? Because look at this. You got $8 of risk. Okay. So let's say we get in. Let's say this thing drops to 192.39 today. We enter the trade and it stops us out the next day. Monday, we get stopped out. Tuesday, we lost $8, right? All right. It turns back over on Wednesday. Heads back south. We enter the trade again, 192.39. By the end of the week, we get stopped out again. So I've lost $8 twice now. I'm down $16. We get in a third time. Goes back down again. Breaks down. Looks like it's going to keep going. 192.39. Get in. Boom. This time it breaks down and goes down and hits our target of 168.39. You just made $24. You lost 8 twice, so you lost 16. You just made 24. You have a profit of $8. But you were only right 1 out of 3 times. That's 33%. If you do four, let's say you do four trades, you lose on three of them. You lost $8 three times. That's $24. One of them works out. You make 24. You're now break even. One for four, that's 25%. In other words, if you utilize a 3-to-1 risk reward ratio on every single one of your trades and you stick to the plan, hence the reason I said that, stick to the plan, then guess what? If you're right 27, 28, 29% of the time, you should come out ahead in the long term overall. The problem comes when you deviate from the plan. See, that's where I was going with that red light, green light, the system back before. There were people, and some of those systems work. The black box system. I'm gonna hit this real quick because it's right here. The funny thing is that a lot of people wouldn't follow it. It would turn green, they'd buy it, right, and then it turned red, and they didn't want to lose, so they wouldn't sell. And they take what would have been a small loss and turn it into a massive loss. So it's not the entry point. It's not the knowing when to get in, when to get out. It's managing your emotions right. That's the hardest part of trading and sticking to the plan. A lot of those systems will work in certain market conditions. They usually are tuned into bull markets, right? So when the market is in a nice bullish trend, they actually a lot of them do very well. When it's in a sideways choppy trend or a bear market, they usually don't do that well. So a lot of people lose, but the main reason most people lost is because they deviate from the system, they deviate from the plan. So, um, and that is the hard part of trading, right? Is managing the emotions and making sure that the plan is there. But that's where that question comes in again: is are you comfortable with the risk you're taking? Because if you're comfortable losing $8, okay, then let it do its thing. Let it go. I mean, I did 7 day trades yesterday, and actually, yeah, I had done six. The first three I lost on, or no, one of them I was about break even or made like $50. The other one, I had three other ones that I took, I don't know, 200 to $300 a piece. I was down $705. I was like, it still looks good. I want to pull the trigger one more time. And I did. I'm like, okay, I'm gonna take one more swing at it. Maybe we'll mitigate some of the loss. If I get down where I'm just down, 500 or 400 for the day, I'm okay with that. And lo and behold, the thing just blitzed to the downside, and I almost pulled it out. I'm like, I've got it set up so there's trailing stops, and they all move down automatically. I don't have to do anything. I just have to it's set up and it goes. But I can manually close it out if I want. I can just hit close and it closes everything. And I went from down $700 to only down like 200. And I'm like, oh, maybe I should just take it here. Like, just let it go out. It's still going, still momentum. I'm looking at the numbers. I'm going, okay, I've got about $150 risk on the line, more, right? So if I leave it alone, let the system take it out, I'm going to give back about 150. So I'd be down 350 on the day. I was down 700. Okay, that cuts my loss in half. I'm comfortable with that. I'm good with that. So just let it play out. I'm comfortable with giving back another 150 because I've still pared my loss in half. And then lo and behold, boom, it made another quick move to the downside. And 10 minutes later, by the time I got stopped out, I was up 225. So I went down 705, where I was like, it's not going to be a good day, but it happens. I was ready to give it. I'll take one more swing. $200 risk. If I'm down 900, 910 for the day, I don't like it, but it's the nature of the beast. I might make it back tomorrow. Who knows? But I didn't. I ended up making it back that day in that one trade. And I'm glad I pulled the trigger on it. And I'm glad I didn't take it out too early because then I would have been mad, like, I should have left it. I could have taken it out with $200 loss or whatever it was. But instead, I ended up with a $225 gain. So, um, but yeah, it's wild and crazy, but it's fun though too. And especially when I ended up being 2 for 6. Actually, I tried one more. I swung the bat one more time. I ended up on the day up $75. So probably break even after commissions, but, um, so yeah, and that's why I use baseball a lot because it's like you get in the batter box and it helps me mentally work through like, okay, I've had 4 at bats. I walked once, made $50 or whatever. I've had 3 strikeouts. So I'm 0 for 4. That's not a good game for a baseball player. But then I had a 5th at bat and I hit a home run. So the three strikeouts and the walk were no big deal because the home run made up for all of it and then some. So, and I'm not swinging for home runs. I'm not looking for home runs. They happen, right? Just like a baseball player. I mean, sometimes they're swinging for the fences, but most of the time they're just going up there and they're doing their thing. They're watching the pitch. They're analyzing the situation. What pitches do I expect? Here's what I think is going to happen. Here's what I think is coming. Based on that, here's the plan. But I've got to be able to adapt in a split second because if I'm expecting a fastball and I get a curveball, I've got to adapt and shift and swing different or not swing at all. And trading's no different. And sometimes you swing the bat and boom, you get a home run. Other times you swing the bat and you miss. Because it is trading's very similar. I mean, you got this, bat that's what, 3 inches in diameter, little ball that's about the same size, coming at you 80, 90, 100 miles an hour. And you have a split second to make a decision whether or not to swing at it. And then if you choose to swing at it in that split second, you got to hit it just right and get it somewhere where a defender's not going to get it. And then you have to run. I mean, it's very similar. So, but having played baseball as a kid, and it mentally helps me stay in that spot where I need to be, where I'm calm, cool, and collected. And if I get upside down or something goes wrong, I'm not freaking out. I'm like, okay, I got another bat coming. So, let me get back. I got a bunch of comments here. Hold on. Oh yeah, yeah. I mean, I guess you can call it sideways day. I will not be surprised at all to see it sell off into the close, especially with that news coming out today and having a 3-day weekend. I would imagine a lot of traders are going to be, who knows what kind of news comes out over the weekend. Going into a Friday with bad news coming out, the market's like, I don't know if I want to hold because they got 3 days to either not get anything done. Maybe they come out and make a deal over the weekend. Who knows? Right. So don't forget the question, Jennifer. How much are you comfortable with the risk you have? Maybe you only want to take, I mean, you can do whatever you want, but you don't necessarily have to take all of it out. If it's moving your direction and it looks good, maybe only take half of it. Whatever seems to make sense. I do that all the time. I'm looking at it going, I'm up a little bit, but I'm worried about I don't want to give back my profit, right? Because we've all experienced that if you've been trading a little while, where you get up a couple grand, 5 grand, whatever the number is, maybe a couple hundred, whatever you're working with. And you're like, I don't want to give it up. So you take all your profit out, and then over the next few days, it takes off and runs exactly in the position you wanted it to, and you left a bunch of money on the table. And now you're like, and you're freaking out, right? Because I left money on the table. I could have made more. Woulda, shoulda, coulda syndrome is deadly. But that's why I scale the way I do, because then I get risk out of the way, I bank some profit, and then I still have room to go. And quite often, what I'll do is I will say, okay, here's where I'm going to take half the position out. Just keep it easy, right? Take half the position out. I'm going to put a stop on this part at break even. So I get a little profit here. And then if it does go back against me, so I move the stop to a break even point. So I've got a little bit of profit no matter what happens. It's just a matter of crunching the numbers and where am I at risk wise? What am I comfortable with? How much risk do I want to leave on the table? And then adjusting the size of the trade based on that. So, Steve, that was a more of a joke comment. It wasn't. I wasn't being serious. I don't know if you're joking back or not. That was a little bit ago. Um, yeah, there's not really. I just thought it was funny because it looks kind of like if you see what's the angle of a spider, but it looks like I don't know why they hit my brain, but it just looked, I thought it looked a little bit like a spider. Yes, yeah, so there isn't technically anything called a spider pattern. So, but maybe I should make it up. I mean, I am the pattern whisperer, right? I can whisper to spiders. Uh, so, oh yeah, the coin flip's good. If we got a few extra minutes, I can do that. Yeah, Kevin, that's exactly what it was. Yeah, and they had a good run. I was never a big fan of any of the black box system really, and there are some out there that are effective and work, but they're few and far between. And usually the ones that are effective and work, they charge a fortune for. Which if they work, it doesn't matter, right? It's all about rate of return. But I know guys, I've worked with guys that have worked at software companies. Actually, the one here, Trade Nav, Omega Charts, right? Uh, and he said they'd have traders come with a list long, two pages worth of rules to code into the program to say this, and here's this, and they'd go all code it. Because you could do that with this. You could create your own little black box system on Omega charts. You can go in and create all the criteria and all that stuff. Actually, I think you have to have the upgraded version for that, but it has that capability. And they put all this stuff in there. They did the little red and green arrows that tells you when to buy, when to sell. But they're only getting, one signal a year, maybe two. And they're like, because they're wanting to, package this thing up and sell it as a product, which is cool. I mean, if it's something that helps you make money, if it's a if black box system that is profitable and it works, go for it. So what they did though, and he was telling me this, they started taking out pieces of this formula they had, which the formula was very effective. They back tested it and it created great rates of return. It just didn't have a lot of buy and sell signals. And when you're marketing a product to traders who want to trade actively, if you say and you show them a product, you're only going to do one trade a year, I'm out. I don't want a piece of it because I want to trade actively, right? Because I'm a little crazy. But that's the thing. And they started taking out the pieces of this thing to get more signals. But as they did that, the effectiveness of the system dropped dramatically. So that's the sad reality is that a lot of the ones that are on the market are they are either tweaked or they're created so that they can be marketed and sold well. That's another reason I'm not a big fan of them. Because and the other problem with a lot of the black box systems is, and I saw this goofball on Facebook saying I got 95% win rate with Apple. Well, yeah, you know what happens? Take this section right here, since we have Apple on the screen. If you go back test the stock for a bullish type of system and you back test from this period to this period, guess what you're going to have? Duh. It's going to be a huge winner. But if you go and back test, where's the, oh, we don't have enough time there. Oh, we have to go to, yeah, we go to something like, still don't have enough time there. It's monthly. Okay. So here's 2000, right? Which, I mean, split adjust, actually, it's unadjusted. So we have an actual price, right? Apple was at 134. It dropped to 15. That's a 2000 crash. If you don't test accounting for those moves, and you can see how choppy this thing is, if you only go back test something in a certain period and you don't account for these, your data is totally skewed. So it's very, very specific. And I've over the last couple of years been doing a lot of study on this stuff and playing with it a little bit. I haven't gotten deep into it, just kind of toyed around with it. But even just getting just a little bit below the surface into black box, coding and black box systems and creating systems, it's extraordinarily complicated. And you can't just go test a short period. You got to test numerous different periods so you can get accurate information. Um, yeah, otherwise it's skewed. And here's the one thing too, and this is what I know, and I've commented on some of these cheesy Facebook posts. That this is one of the things I learned about with those that actually create real black box systems that aren't just trying to sell it, but they're creating their own trading system for themselves individually, which is part of the reason I've been playing with it. But it's super complicated, and I'm like a quarter of a nerd, so I'm not that technical enough to be dangerous is about it. Um, but if you have a black box system that comes out higher than 70% accuracy, then it's called overfitting, right? Where you're accounting for certain parts of data and not others. So you've got to have accurate, truthful data. You got to give it enough information to be able to actually pull down the data and say, okay, here's what's going on. Here's what we think's happening. So if you give it too much data or you give it specific data for a specific time, but you don't account for these other periods, then again, it's not going to work properly. So anybody that claims they have a black box system or an automated trading system that gets a better than 70% success rate, be suspicious. So a black box system. Yeah, you're late. You're super late, Brenda. But look, the cat's up there for you. The crazy, well, not the crazy one. The new one's the crazy one. So yeah, you can go create, automated systems. You can do it with this. I mean, most software programs these days have it in there, but you gotta have some technical skills, some coding ability to do it. I have a little bit, but not much. So yeah, just anything over 70%, you got to be suspicious. When this guy's saying 95%, I know it's overfitted. It's the back testing is done is horrible. So not a good thing. Um, yeah, I just noticed that, Jennifer. You're not alone. She said, watch, everybody's going to chime in. I found I short my profits and get out too early, let my losses go too far. I know it's reviewed often, but really hard to change my headspace about that. I recognize it and trying to do better. That last sentence is the key. And that's the hard part to trading because what you're fighting is fear. You got fear on both sides of the spectrum. You're afraid to get out because if you get out and it keeps running, then you left money on the table and now you're mad because you left money on the table. But you're also afraid that you've got profit. And if you don't get out because you've been in that situation where you had profit and then it went the other way and your profit not only went away, but you were upside down. And then you're upside down and then all of a sudden you're like, oh, well, I need to get back to where I was. I was up, $500 and now I'm down 300. I need to get back up to $500, then I'll get out. I should have gotten out there. So if I get back there, then I'll get out. The next thing you know, you're down 500. Like, okay, if I get out, break even. If it go, and next thing you know, you're down 1,000. You're like, oh, okay, I should have got out. It was 300. When in doubt, just get out. The beauty is that there's always going to be another trade, and that's something I've been finding. That's where this week, especially with the futures trading, because futures are extremely volatile, and if you're trading it directionally, and I've kind of this is actually my best week so far. Every single day I've been profitable. Yesterday was actually the smallest. Um, and a lot of it is because I've got it set up automated where I maintain my risk. I reduce my risk as quickly as possible. I've got it set up so if it moves just a point, it drops my risk by 20 or 30%. And then every point it moves, every tick it moves, continues to reduce my risk. So my goal is to get my risk to zero as quickly as possible. Once I get my risk to zero, I can let the rest of it go. Just like that one yesterday. I'm upside down $705. I'm like, okay, I'll take another $200 swing at it. And boom, it starts to move quick. And I'm like, sweet, I'm only down 300. And my brain's going, I'm in trading mode. And I'm like, okay, how much more? I'm looking at the stop, where it's at right now. How much am I going to get back if it backs up against me? And am I willing to take that little bit extra risk and see if it continues to run or not? And that's the constant thing. Okay, I've got, I'm only down 200 now. I've gained back 500. I was upside down 700. Now I'm down 200. It's going to cost me another 150 if it turns around. Well, that puts me at 350. I'm okay with that. Let it go. And sure enough, it kept going. And so that constant question of how much risk am I at here? Where do I move it to? Do I want to take it out? Does it make sense? Is it slowing down? There was enough momentum and enough volume pushing it lower that I'm like, I think it's going to keep going because the Bears just kept pushing. And so even though it backed up a little bit, I'm like, no, just let it go. If I get back another 150, so be it. And it worked out beautifully. So you're fighting the battle that is an everyday fight for traders. And it never changes. I thought it would go away. I mean, I'm 25 years in, just over 25 years. It was April of 2000. And it's a daily battle. That constant back and forth of what do I do here? And that's where that question in my mind, it's just a year, maybe, not even a year ago, I don't think, where that's now constantly there. Like, where am I at risk wise? How much am I comfortable with leaving there? Or do I want to get it off the table? And I had a day a couple weeks ago where it was moving, and then I was like, I think it's going to turn around. So I just closed it out. I tried to maximize my profit like two or three times in one day. I nailed it. It was awesome. It's always fun when you have those days, and then when you miss it and you get stopped out, it's like, right? So it is. It's a roller coaster ride on a daily basis. It's one of those things of it's mostly just getting used to it and learning how to deal with it the mental side of trading and that woulda, shoulda, coulda, and adjusting your position and your trades and this and that so that you can always stay in a calm, cool, collected place. If you find yourself panicking and freaking out, whether you're getting in a trade or out of a trade, then you have too much at risk. That's a very simple rule to stand by. If you're nervous about your trade, you have way too much at risk. Cut it down to where you can sit there and say, okay, I don't care what happens with this thing. If it goes against me and I get stopped out, I'm going to lose 300 bucks. Don't care. I'm comfortable with that. I'm comfortable losing $300. If you have $5,000 on the line and you're only comfortable losing 1,000, you need to cut 80% of your trade back because that's when you make foolish decisions. Is when you're on edge, when you're not, when emotions are making your decisions and you're not. So you got to get yourself mentally to a place where you can stay calm, cool, and collected no matter what's going on. That's why the plans are so important. If you have things pre-planned and say, this is what I'm going to do. And if you're not in a place emotionally where you can't pull the trigger on a stop and get out, then set a hard stop and let the system do it. It's not fun. It's not fun getting stopped out ever. I mean, you just all heard at the beginning, I got stopped out. I mean, it was cost me, I don't know. I think I was up just over 500. Now I'm up 411 for the day. Okay, so I gave back like 120 bucks. Small risk. I wasn't worried about it. So make sure I know. Well, it's funny. It's, a lot of these things, and I can't remember, it was several years ago, but I was describing the whole stop thing. You're up 500, then all of a sudden you're down 200, then you're down 500. And, if I could just get there and like I messaged in, he goes, have you tapped like, are you spying on me through my computer? Like watching my facial expressions through my camera? Are you hacking my machine? Like you're describing exactly what I go through all the time. Like it's because I've been there, right? I know exactly what you're going through because we're really not any different when it comes to emotions. Fear is the main driver. And if you can learn to manage that fear, it will absolutely dramatically change the way you trade because you'll be in a calm, cool, collected place. And you won't be making decisions based on emotion. You'll still succumb to it. I still do. I still get out or get in and like, I should have done that. Just a couple days ago, I did. Like, what was I thinking? I should have got in there. Because you have, especially when you have a good trade, you make a whole bunch of money. You bank 500 bucks in like 3 minutes. That's pretty fun. I won't do that again. And so you're trying to do it again, but it's like the setup's not there. And the hard part for me is being patient and waiting for the right setup to show up before I pull the trigger. And that's the one thing that really flipped for me is that especially when I get patient and relaxed and like just let it do its thing. If you miss it, you're going to have another at bat in 2 or 3 innings. Just breathe, right? Oh, good. Yeah, exactly, Jennifer. I'm glad. I'm glad that hit home. Obviously, it's hit home for some of you. So, but yeah, and it is. It's just, I mean, trading is literally, I've said this for years. It's one of the most challenging, most difficult things you'll ever attempt to do in your life because of that. I mean, everything in life has fear at some level. And we were given fear for a reason, right? God gave it to us to keep us safe. But sometimes it's a double-edged sword though, too, right? It could work against you. So you've got to learn to use fear in your favor. First, I mean, I'm glad you said that. I hadn't even thought it's because of fear, because that's what it is. It's all fear. It's like I heard Ryan several weeks ago. I remember thinking this years ago too, and we probably, we learned a lot from each other. And I remember years ago, like greed is not really greed; it's fear. It's fear of missing out, right? The full FOMO thing. It's not that you're necessarily being greedy, so you don't want to leave money on the table. So everything is fear based. It's all based on fear. And it's learning how to manage that fear in an effective way and keeping that fear at bay, not eliminate it because it's never going to go away, but getting to a place where you manage it well and it doesn't take over your trading. So, um, yep, look at the bigger picture. And that's one reason Jennifer says I need to understand it. It's just business as long as I'm overall making money. And that's where the risk reward, and that's where I mean, for 2 or 3 years now, I've been baseball is one analogy I go back to constantly. Batting, because I grew up playing baseball, right? I enjoy watching it. I don't go to many games, but um, we went to one a couple weeks ago, the minor league team here. But I'm sitting there thinking about like trading. The same thing with poker. Some of you know I love playing poker, right? And poker and trading are synonymous. They're the same thing. And trading is a lot like batting in baseball. You get a pitch, you analyze the situation, and then you got a pitch, you got to decide what to do with it. And if you watch the pros, the people at the peak of the game, the ones that are making all the money, what do? They're not all upset. They're not freaking out. They're not scared. They just go out, sit up on the plate. They look around. Okay, here's the inning. Here's this. Here's this. Here's the pitch that I'm expecting. I've studied the pitcher. I know what kind of pitcher he is, how he throws, what he does. You've studied that, so you know this. You have some idea of what to expect to come, but you don't know with certainty until the ball releases from his hand. Then you have a split second to make a decision. Like, what do I do? And that's where the training part comes in. Is you have to train so that you're not really necessarily even. I mean, you're making a decision, but it's so subconscious that it's just like that, right? So in my mind, and this is where your comment need to understand it's just business. As long as I think about it as a batter. If I have 4 or 5 at bats in the day, just like yesterday, I took 6 at bats, 6 or 7, whatever it was, and only one of them did I get a hit. 3 strikeouts, one walk, maybe a ground out or something like that. But I got one hit, but that one hit was a home run, and it made up for all the other strikeouts. So when you look at the averages, and you want to see the coin flip thing, wrap your mind around that and go, you know what? I don't have to be right that often, as long as you stick to the plan. And when you work at getting your risk, minimizing your risk as quickly as possible, that's one thing. I mean, even my swing trades. I mean, I'm a little cranky today because NEM was bottoming out, which is Newmont, right? It's gold. Gold's been super bullish. A lot of these gold stocks are probably likely to go significantly higher. And I've got some long-term positions on it, but I'm like, I'm going to add to it. It dipped down, and boom, I grabbed some, and I put in order to sell it, part of it at 50% profit, and it hit a couple of days ago. I've still got my other position there, so I'm still, if it's, I mean, it's up today a little bit. It's not. Oh yeah, it's gapped up. There it is. I guess it's up about where it opened. But if I would have left it alone, I would have made 100% instead of 50%. But do I care? No, because I still have a position, and those are profitable. So I'm still making money, but I bank some too. So now I have some cash on the sidelines that I can deploy somewhere else if I want to. So it's a matter of, I'm in, I'm out, I'm taking a little bit of profit, but leave the rest there in case it bolts to the upside. But if it drops to the downside, I don't have as much risk. Again, it's just adjusting the size to manage that fear. So, but yeah, I just got so far afield. I asked you for symbols, you gave me a bunch, Jennifer, and I'm like, where'd they go? I kept thinking I got to go back to those. Oh, we'll look at those real quick. I just noticed for only like 7 or 8 minutes to go. Spiders, well, I mean, the SPX. Um, yeah, the big sell off yesterday, heavy volume. And then today, no, that's not today yet. It should update here in a second. But yeah, we're gap down. Well, there's a little open window right here, right? So odds are we're probably going to fill that. I don't know what's not updating, but oh well. So very nose driven. I mean, obviously, here's the tariff collapse. Things dropped off, and news started coming out. Well, there we go. There's today. And what are we at? 10 o'clock. So we got 3 hours to go. So we're a little more than halfway through the day, and we're at 40 million or so shares of volume. So if that run rate continues, we're going to have a pretty high volume day. And a lot of it was on the gap in the very open, the first few minutes of the market. So, but again, I'm expecting the market to sell off into the close. I could be wrong. It could rally. I mean, the bulls keep buying the dip, at least they're trying to, and they are right now. 3 hours can change, or 3 hours can make a vast difference. I mean, you saw yesterday in the last like 20, 30 minutes, it sold off a decent amount. So, Yeah, I just usually on long weekends like this when the news is out, I don't know if I should say usually. I've never really done a study on it to see, how much actually goes, but I know for me, I wouldn't be excited about holding anything bullish over the weekend. Not stocks, especially tech or anything that's, sensitive to the economy. I mean, gold I'm bullish on, but um, oh, there's GLD. That's a gold ETF. Yeah, Spider's Gold Trust. This wasn't a double top pattern before, but I didn't expect it to really drop through it, but it might. I mean, if it drops back through there, then maybe. But the pattern's kind of been negated a little bit. Just depends on where it goes from here. So nothing too excited on this. I mean, it's gappy. I usually don't like the gappiness of these, but it trades based on what gold's done overnight, right? So it's a lot like a foreign stock. If you see something gappy like this, it's usually because it's a foreign company that trades on our exchange. So it trades in the overseas market, Europe or wherever it is, and uh, and then it opens here based on what it did overnight. So that's why you get the gappiness. And I'm not a huge fan of them. Meta, look at that. Look at that beautiful evening star. Well, let's see. It's not textbook. The volume should be heavy on the third day, but longer term, I mean, midterm and intermediate term over the last couple of years are still bullish, higher lows. We have a lower high right now at the moment, in the short term at least. So I'm not seeing anything. Well, you can see there's an evening start here, right? A little pot. We had a downward move, evening star, and it dropped off from there. Will it continue to drop from here? Obviously, we don't know. None of us have a crystal ball. But is that a clue? There's definitely a pattern. A little open window here that probably wants to get closed. So I can see it coming back down here to 681. If it breaks above this 660 area, if the market turns bullish again, I can see it coming back up to the 725. I wouldn't trade it right here in this moment. Not on a longer term. Maybe a swing trade, a 1 to 5 day thing. If you're if you think if it breaks down below here, if it breaks that, I might trade it down here to say 600. Good round number. That's a 20-point move. That's only 3%, which is not bad. I mean, you'll probably pick up 30% or so on an option because generally speaking, you get about a 10-to-1 leverage. But am I going to get excited about taking a bunch of risk? I mean, let's see. I'm just curious what meta options are. I'm going to look at July. June's a little too tight, but July, yeah, I mean the puts with a delta of 60 or $47. Am I going to put $47 at risk to make 30%? It's not enough for me. It just doesn't get me excited. Now, if I think it's going to move long term from here down to maybe 425 because there's kind of a head and shoulders that they got close. But if that was to play out, would I buy 6 or 8 months, a year or two's worth of out of the money option at 425? Possibly. I'm not going to at this moment, but I do have some long positions like that. Uh, oh, trying to catch up real quick. We only got a couple minutes left. Oh, you want to see Microsoft? Let me bring that up on the chart. So yeah, Meta's kind of like, eh. Microsoft's similar. I mean, that move is so big. It's an earnings move, and we're back. I think that's an all-time high, is it not? Pretty sure it is. Yeah. So I wouldn't expect it to stay up here because that's a huge, huge gap, huge open window. But do I think it's going to tank and drop off quickly? Probably not. I would expect it to go sideways for a bit, unless there's some kind of news. I mean, if news comes out and changes things, if we get bad economic data, something like this market will probably sell off. But I'm expecting more of kind of a chop sideways for a little bit because the news has been hit and miss. It's been good, some bad. So unless we get really, really bad news from somewhere, then I expect just kind of a ho hum, back and forth. So not a bad time to do some non-directional trading. But like I've said before, I'm still overall, macro wise, I'm bearish on the market. I think that we've got a lot of underlying storms going on, and if one of them breaks, one of them makes landfall, it could get ugly. So I lean in into the bearish side of the market. So that if something like that happens, I'm already in position, right? So if a bad news comes out and it gets tanked, just like the tariffs. I mean, with the tariff news, that was awesome. I mean, it wasn't good for people that were getting crushed, but I was already on the bearish side because I was already bearish anyway. We were already having a bearish move, and I was already profitable. And when that hit, it just made it better. So um, that's just me. My macro view says that we're bearish longer term, or at least for this year. So we shall see. Powell talks in a couple of hours. He does. I thought he didn't. I thought that was somebody else was talking, but well, that'll certainly make it interesting. I didn't see that. I thought he was giving some commencement speech on Sunday or something. But when's the last 90-day extension in? 90-day extension. You have to help me out with that one. Oh, yeah, Brenda. Even though you were late, I'll still look at the cues for you, which, I mean, there's not going to be a whole lot to see here. It's the overall market. Except that, I mean, there's the intermediate term trend. We're hitting the bottom end of that, right? We've got that. It's a pretty solid line. I mean, we got 3 hits on it. We're doing a roll reversal on it right near the highs. So interesting, though. Watch this. Maybe some of you see it, maybe some of you don't. I just saw it. I don't like the downslope, but if we roll over here and keep going, we've got a left shoulder, a head, and a right shoulder. So if we roll over and head down, get rid of that. We don't need that thing on there. The neckline's sloping down, which I really can't stand. This isn't too bad, but it's not good either. So, I mean, yeah, there's not much there except that I wouldn't be surprised if we break that 503, that 500 level. We're probably coming down to about right there. I mean, not necessarily the open window, but you've got some short-term resistance, which should act as support. Again, news can change all that in an instant. So, what are my thoughts on Bitcoin? Well, I think as a trading vehicle, it is spectacular. I've never traded it, but from a fundamental perspective, I'm going to be honest. I think it's trash. People say that's a store of value, and it's like, how? What is it? What does it do? Um, I've always been and there's I've gotten into these debates on Facebook with some of these goofballs, and it's I just don't see any real world use for it. And when you really break just basic life down, it's food, clothing, and shelter. And pretty much everything we have adds some value into one of those spaces. I mean, gold obviously has uses. Silver has tons of uses. Um, Land, homes, lumber, every commodity has an actual use in life that you can do with it. So you have to mine it, turn it into what you need. So there's an economic value to it. I don't see any of that with Bitcoin. It's nothing more than just a digital token that has no real world use. You can't turn it into food. You can't grow food on it, right? If you have land, land has value because you can grow something. Land has value so you can put a house on it and provide shelter, food, clothing, shelter. So I try to break things down to its simplest form. It's like if it doesn't fit into one of those boxes, it does one of these things, then long term it has no real use. I mean, it doesn't really fit into the definition of a currency. It's not a commodity, even though some people have classified it that way. A commodity is something that has an actual use, like lumber or copper, right? A currency is, it's a system of trade. It's something that we use as a way to say, okay, I'm not going to trade you my eggs I have for your loaf of bread. I'm going to go down and give you $5 for that loaf of bread, and then you go find egg. You take my $5 and go buy eggs from somebody. I mean, that's all currency is, right? I mean, I can see digital currency possibly but I'll never use digital currency. CBDC? Nope. No way in. You know what? No way. Absolutely no way. People talk about this. Never going to happen. Not for me, it's not. Because why would you ever? I mean, look at what they did in Canada. They have that up there. And those truckers, what was that, a few years ago? They just shut off their bank accounts. I mean, they can technically do that now to a certain degree. When they shut off your bank account if you're, involved in criminal activity, but you get a digital currency and they just say, well, they can track everything you buy and see what you're buying because it's digital. They know what you're purchasing. And I mean, we're kind of sort of there with credit cards and stuff, right? It's all tracked. You can see it at least. But to have somebody in the government have control of that? Nope. Nope. They can just shut it off. That gives them total control over everything. Not for me. I'm out of the country if they do that. So yeah, I just, and a lot of these goofballs on Facebook, and I'm not, don't take that wrong. I don't know what your opinion is on Roman, but I've gotten into these debates with these guys. And the thing I can't stand about them, I know I'm way off, but we're over too. So this is bonus. Um, most of them are just so arrogant. They think that because you don't agree with them, then you haven't studied it. I looked into it back at 2012 when it was 300 bucks a coin or something like that. There was a guy I knew that was heavy into it. He worked for the Bitcoin Foundation, that was a promotional foundation they put together to promote Bitcoin. And he actually asked me about working for him part time. I was like, that sounds kind of interesting. So I actually went through the interview process. It was just a part time gig. It didn't pay a lot, so it was just more for fun for me. But I dug into it deep. Like, what is this? And I'm like, okay, I buy 10 coins at 300 bucks. That's 3 grand. Why? What's it going to do for me? I mean, obviously today I look back, and go, I should have. If I had bought 10 coins, I'd have $1 million right now. Just play money. But I'm looking at it at the time, I'm going, I don't see any real value here. So, and I think long term, I think it's probably gonna die. It's a good trading vehicle. I mean, get in and get out. You couldn't short it from what I understand in the beginning. Now apparently you can. And I've been tempted to. I have it on my screen. I look at it just out of curiosity. But yeah, it drives me nuts and there's so many people in that mindset now that if you don't agree with me and you don't align your beliefs with mine, then you're wrong or you're an idiot or you're ignorant and you haven't studied it. You don't know what you're talking about. It's not, and that doesn't apply just to Bitcoin. It applies to a lot of things. The political realm, it's like you can no longer have a rational conversation with somebody and just say, here's what I believe, here's my opinion. And then the other person say, well, okay, but I believe this. And if they're subjective and there's no data or fact, if there's no objective way to define and say that's your opinion, okay, I respect your opinion. I think you're wrong, but I'm going to respect your opinion. You have the right to hold that opinion. I don't have a problem. I'm not going to beat you over the head and say you're an idiot because you don't agree with me. It's just, in the old days we had respectful debate and then we went out and had a beer, right? But um, yeah, we looked at spiders, Brenda. Same thing. SPX spiders is identical. So, what country would I go to? Whew, I just opened a can of worms. I see. I don't know. I actually just saw a video the other day with Jim Rogers, and he's in Singapore. And he wanted to go to China, but it was too crazy. They couldn't do it. But he's in Singapore. It's awesome. Everything works all the time. The electricity, it's always clean, right? You can't chew gum in Singapore or something like that. So there's no gum all over the sidewalks. So I don't know. I don't think it's ever going to come to that, but I hope it doesn't. So yeah, exactly, Roman. It's like the old story of the shoeshine boy. When the shoeshine boy starts giving you stock advice, the end is near. Roman say, yeah, electrician talking about it. Yeah, I got a friend that's a loan officer and same thing, he was talking about it. And I was like, yeah, I just kind of, I just casually was like, yeah, no, I don't really believe in it. And he kind of left it at that, which was cool. But he's a big believer in it. And to me, it's a cult. It's very cultish. It's like you're either with me or you're against me. You can't have a different opinion than me. It just doesn't make sense. I don't know if it's regulated or not. I don't think it is. People want to regulate it. I don't want to regulate it. I say just leave it alone. It'll die eventually, I think. That's my opinion. I might be wrong. I've been wrong before. So, yeah, exactly, Jennifer. I just saw that comment after I said it, but yeah, it is. Yeah, exactly. They are tempting. Yeah, I agree, Norm. It's and that's the thing, when you're chasing a shiny object, that usually means you're in the wrong place. Same thing with trading. I mean, when you're getting emotional and you're panicking because I'm missing out, when you're in that FOMO mindset, it's usually the opposite happens. And all you have to do is watch yourself closely enough when you're trading. It's like, and I fall into the trap still sometimes. I'm like, oh, I'm gonna miss it. I almost did this morning. And I should have pulled the trigger actually because it kept running. I was like, I missed the entry point. I had a plan, I missed the entry point. I'm like, and I had it happen just a couple of days ago. It was irritating. I literally went to click the button and it moved so fast that I missed it by like a point. And then it was outside of my plan, and I'm like, okay. I was disciplined enough to stay out of it, even though I still would have killed it. But it happens on a regular basis. So going back to the earlier comment of you've got to get used to managing that because it happens all the time. And you've got to get it through your head that it's okay when it happens. That's the hard. That was probably the biggest hurdle for me to get over. It's okay. So I missed a trade. Okay. There's more at bats coming. I'm gonna get more swings. And although I struck out this time and I walked last time, I might hit a home run on the next one. Don't know. It's like I think I was talking about this last week, or at least I was thinking about it. It's Gary Payton. I grew up watching him in college. I remember him getting an interview one time, and I'm 12 or 14. And somebody asked him, he got on a cold streak. One game, he was just terrible. He missed everything almost. Like, well, didn't you decide to stop shooting? I mean, why wouldn't you just take a break? He's like, nah. He goes, why? You just keep shooting, and eventually you're going to get back into your normal groove. You can't just stop shooting because you had a bad streak. You just keep go out and playing. You just keep doing what you've been trained to do, and eventually you get back into that normal mode. You have the opposite too, where you get in these hot streaks, right? Where you're just on fire and hitting everything. And it's easy to get into that place where you get complacent because you think you finally figured it out. That's where I'm beating my head against the wall this week, especially today. Because every single day I've been green this week. In futures, I haven't done that yet. But I've been playing with it for, I don't know, a year or two now. And it's so volatile, it's so crazy. 5 days in a row. So right now I'm literally like, just stay humble. You haven't figured it out. Okay. I haven't figured it out. It's a constant thing, just like baseball players. They haven't figured the game out. They're still studying it every single day. They're still working at getting better every single day and getting better at hitting the ball. And you have to stay in that mode. And it takes extreme discipline, extreme focus. And that's where I've had challenges over the years because you can tell I'm a little ADD, right? Right, Brenda? I've had squirrels. And it's easy to do that. It's not uncommon. And it's easy to get into that mode where, you have a hot streak. You're like, oh, I got this figured out. And then you get lackadaisical and you're like, oh no. And then you're giving it back and now you're beating yourself up. Yeah. So anyway, yep. Opinions are like those things we have that we sit on, right? Everybody's got one. Panama or Costa Rica. Yeah, I can't do the heat. Not yet. Maybe when it gets super old, but is coin being added to the SPX? I don't know. I think I did hear that that is happening, but that's a good idea, Steve. Yeah, if your trading platform gets all glitchy or gets weird, yeah, it's usually best to close it out and get out. So most of the stuff I have is purely automated, so I can just leave it be and let the have trading stops. It'll move up and or move down. It'll take me out. So that way I don't have to worry about it. I set the plan up, let it execute by itself. So, but we are way over time. Holy God! I just realized we're 15 minutes over. So I know you're laughing at me, Brendan. That's fine. I laugh at myself all the time. Life's too short to be that serious. So, and especially if you're, trade, you got to keep a light attitude and work through the mental challenges that trading brings, and you'll get there. The only way, in my opinion, the only way you ever lose in trading is if you quit, because it's going to be hard. And just like and that's another thing with baseball, it's like you know when you're watching a professional baseball player, you look at the just the way they are on the field. They walk out, they don't get upset, they don't get cranky when they strike out. I mean, sometimes, but 99.9% of the time, they go out, they do their thing, and if they strike out, they go back to the dugout. It's not a big deal to them. Okay, I struck out. So what? I'm gonna go back, grab my glove, go play defense. I gotta focus on this other part of the game. And then next time I have it at bat, I want to try to make it the best one I can. And they literally, baseball players, they don't, you know, show up at 23 years old in the majors with only playing for a year or two. They've taken tens of thousands of pitches and fine-tuned their art to where they've made it to that level. And that's where, I mean, I think trading is the same way. It's not something you're going to do overnight. It's something you gotta swing the bat as much as you possibly can. That's why I go, oh, especially with Omega charts. You go back and do the practice trading with this. I've done that a ton. I haven't done it for a while, but I mean, the trading I do now on an active basis, it gives me plenty of pitches every day. But if you don't have a source to do lots of pitches, go back and use this or practice trade. Do whatever you have to see as many different views as you possibly can, and focus on staying in a calm, cool, collected mindset. Keep that the position that you have, the size that you have, where you're comfortable, and you can make decisions in a calm, cool, collected state. Because when you're making decisions based on emotion, you got FOMO going or fear, anything. If fear's getting to you in any way, shape, or form, then you need to do something to get rid of that. If it's just completely get out of the trade, fine. I've exited the market for 2 or 3 weeks at a time. I have a few that go against me, and I make a stupid decision. It's like, I'm like, okay, I'm gonna take a break. I stay away as long as I can to get my head straight. Go back to bed. You mean right now? I probably should actually. I only got like 3 hours of sleep last night, so. But, um, oh, you have coins out of the SPX. Yeah, you have some crypto exposure. So, yeah, I gotta go. I'm way over. I don't know. Hopefully, Andrew's not yelling. He hasn't yelled at me yet, so maybe we can keep going. Let's make this a 2 hour session. Thank you, Brenda. You too. Yeah, happy Memorial Day. So, um, yeah, thanks, Roman. You too. Yeah, it's always good to see you. So, having fun. Thank you, Jennifer. I appreciate that. Um, oh, when fear kicks in, go back to bed. Yeah. Or just learn to manage it well. But if that's what it takes for you to manage it well, then do that. Do what works for you. That's what I tell people. There is no right or wrong answer when it comes to trading. Just like, again, baseball, everybody has a little different stance, right? There's no right or wrong stance. Pitchers are all a little bit different. They throw a little different. There are core techniques to use, but if you adapt your stance to those core techniques, then it's still going to work. Same thing with trading. You don't have to, you can trade a lot of different ways. You just have to figure out what works for you. And, what's your stance? Stick to the core stuff, but what is your stance? How do you pitch? How do you stand in the batter's box? How do you hold your bat? Those are open to interpretation. Anyway, all right, y'all have a great weekend. And thanks for hanging out. Thanks, Andrew, for being patient. And y'all take care. God bless. Bye bye.